Good morning, everybody. Today is the fourth day in the month of July, 2022. My name is Heritage Markets Analyst at HFM Nigeria. And as always, we'll check through the markets to find out what the overall sentiment is, if it provides opportunities, and then how we can take advantage of it. But please remember that this is just a communication material and nothing in this communication contains or should be considered as investment advice or investment recommendations. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible. And like what we have this morning in terms of the overall market environment, is a more mixed start. First of all, it's just a Monday. The week generally is going to be a light one. On in terms of the calendar, we have the RBA meeting, the US Federal Reserve meeting minutes, yes, NFP on Friday, a couple of services PMI for the US, but there's really not so much major tier one central bank meetings, so much of them, or data points, so much of them. So there's that. Apart from that, today is also July 4th. So we also have the US Independence Day holiday, basically. And then with holidays, especially major ones like this, comes thinner market liquidity, comes, you know, slow movements, and it's what we are saying. But generally, nothing much has changed in terms of the overall markets, in terms of the overall market environment coming from last week, really for the most of the year, actually. There's still so much worry about global economic recession, so much worry about economic slowdown. And that's kept risk assets down and kept safe haven instruments or safe assets on the upside. Now, I had this written down earlier in the day. I said, Antipodeans lead FX today, although overall flows are disjointed ahead of US holiday-themed trading environment. Now, not much has changed in the market since last week, as focus remains on global economic slowdown and recession risks. Now, we also had data, GDP now forecast. This is one of the mostly watched data points for Atlanta Federal Reserve, basically on the economy. And then it shows that the US is already technically in a recession already, as data already shows that growth fell about to negative 2.1% for quarter 2. So clearly that's already, recession risk already. And this clearly is not a good thing for equities, not a good thing for risk assets generally. Supportive factors for the safe haven assets, right? So let's have that at the back of our minds. But so far today, the moves that we've seen are mostly disjointed. We've not really had so much in terms of major moves. Yes, FX has printed some solid moves, but most of them are mostly pullbacks and not much really, you know, um, in there. Equities, for example, trade mostly mixed to start today, right? The ranges are even small. You look at the Asian balances, most of them make some up, some down. The European equities on the positive side, and while US futures are mostly down, right? On the commodity side, even on the bond yield side as well, most of them are mixed. So we don't really have so much, moving there. And then measures volatility are still very much higher, very much heightened, just basically showing the risks in the markets. Now, on the currency side, yes, it points to a more positive start. Commodity linked currencies are up to start the day, and we have AUD, NZD, top of the majors. CAD also not far behind, right? But most of those moves are seen as mostly pullbacks, especially when you look at equities and the bond yield markets, not really on the bond market, not really showing that positive environment. You want to very much more careful, with the moves that we're seeing, right? And on the weaker side, you have JPY as the laggard, CHF and USD not far. I said, although the strength in Antipodeans are seen as mostly pullbacks, the negatives are very much intact, especially when you look at the equities and the bond yields. So that makes the flow a bit more tricky to start the day. AUDGPO has moved up by quite, a margin. Same thing with NZDGPO, but have all moved into key areas of resistance, previous supports going back to late June. On the calendar is really light, and then we can expect a slow day, especially when you have US Independence holiday in the mix. Now, let's just look at what I've been saying since. This is the dollar index, for example. In today's session so far, the 4th of July, we've basically just remained in one spot. Net change for the week and today basically just zero, not really gone anywhere, right? Right back at where we started. And that gives you a picture of where, the dollar is trading against some of the other all the major currencies, particularly the euro. You look at the equity space. Now, this is today's session, for example. Just today's session, for example. Yes, we got today down about 0.67% so far today. But in terms of, we're still within yesterday's ranges, finding support at this key 1300 level, daily pivot points as well. Not so much really, not so much going in on that particular front. And I think it should even continue like this for most of the day. We could have so much slow movement. Now, don't forget that the holidays in markets could also bring volatile movements as well, right? Because of the thinner liquidity, we could also have imbalance and then just so much messy price action. So there's that you want to pay attention to. But this is a key area of support. You can see previous one for early in the day, we had it as support, resistance, support as well. So I mean, there's that to also pay attention to. Now, does it mean that we cannot continue higher from here? Well, we could. Does it mean we cannot continue lower from here? Well, we could. But in terms of convictions, it's almost zero. So that means that as a trader here as well, you want to also be more cautious, the kinds of moves that we're seeing so far. And it's basically the same story with the other, equity bosses, right? So I'm, for one, being a little bit more patient. And I think that we should be too as well. Now, you may want to look at AUD JPY and say, okay, yes, strength and weakness, AUD being strong, JPY being weak. It's moved up already about 136 pips already above the ATR, up about 0.57%. Looks good, right? But where we're currently trading at is also previous level of support. If you look at it as well, right, going back to the 24th thereabout of June, 23rd of June, going back to even the 16th of June, as well as even the 14th of June or about. So it's a key area of resistance that we're trading into. And then with the kind of environment that we have right now, you really don't want to be caught, selling into areas like that, right? You can see what's buying into areas like that, right? You can see we also had very key area of support here around this key 93.00 level. We marked the 27th of June. So it could be seen mostly as a pullback, right? Because the negatives really remain, hasn't really changed. Not much has changed. And we're just about coinciding with the 50% retracement level coming, if you measure from, the highs of 28th of June down to the lows we saw or printed on Friday. So there's that to pay attention to. You look at NZD as well, similar story there as well. Yes, we've had some bounce from Friday. It's continuing today's session, but right now we're trading into previous support levels around this key 84.5. So that means, we could continue downwards from here. Well, it could continue and see further, push higher, pairing of losses going to the upside, right? Convictions are really low. And then such as well, you as a trader, you want to also be more, patient with the kinds of moves that we're seeing today. On the calendar today, it's a light one. Really not much tier one data expected on the calendar. Really a light one. We have US 10, holiday themed trading environment today. It's just a Monday. We have the RBA meeting tomorrow, which will be interesting. But so far right now, there's not so much going on. And I think that, sitting on your hands could be a better way to go in terms of looking for new short-term opportunities. But longer term, the negatives remain. It's still a win factor on the likes of the Australian dollar, on the likes of the New Zealand dollar, and then still a strong factor for the dollar itself. JPY has seen some form of strength coming from late last week, but with the BOJ still remaining dovish, I mean, you want to be more careful with that particular one. But that's it for now. We're going to leave that at that point. If you have any questions, please do not hesitate to ask, and we'll always do our best to help. Thank you, and do enjoy the rest of your trading session. Bye for now.